if we take a look at the Durham region, Oshawa is in fact the most affordable place to purchase in. And if we look at the number of sales, the first column, you can see that Oshawa has the most amount of activity, which means, most amount of activity means that there's more options and there's more choice for investors or end users to essentially look into, consider, and decide.
You mentioned something on the previous slide, and I didn't want to interrupt you, but I think you said 6 days is what it was taking the average property to sell.
That's right. That's right.
Can you give some context to that? Like how unique is that?
Yeah, I mean, I would say.
Welcome to the Canadian Real Estate Channel. I'm Andrew Hines. I've taken over the channel for the month to do the market updates. And in case you don't know me, I'm a real estate investor, started in Ontario. I'm investing both there and in Florida. And I also have a podcast, a real estate podcast. If you haven't checked that out, definitely check that out. I'm at the Andrew Hines on Instagram, and you can find the podcast just by searching my name, Andrew Hines. So now let's get into today's update. I have Saman Habibi here to do an update on the Oshawa market. And Saman was just running me through his slides real quickly. It looks like a fantastic presentation packed with value. And I'm really enjoying doing these updates because I'm learning so much about these individual markets. Sure, we know a lot about macro level. We can see a lot of the signs and what's going on. But if we want to drill down on what the unique opportunities are in each of the different cities, this is where it's at. So Saman, thanks for doing this.
Thanks for having me on the channel again.
Well, it's great. I'm really looking forward to the update. I just saw the Coles Note version, so let's go ahead and dive in.
Yeah, absolutely. Let's do that. So once again, everyone, welcome back to another video where we discuss all things Oshawa related, and we're just going to jump right into it. So what we're going to do is we're going to talk about the Durham market. We're going to dive into the Durham market and focus on Oshawa. Then we'll do an Oshawa versus GTA. I've been doing this in the past, but what I want to do is kind of show you Oshawa in comparison and in relative to the rest of the GTA, and if the prices have moved up or down. We'll try and predict what March is going to look like, and then I'm going to give you some comfort over some rental market data. So let's jump right in. So in terms of the market, what we've seen in the Durham region is we've seen prices move up. So in the Durham region, the average house is now worth $1.228 million. And that's, of course, this presentation is February 2022. Month over month, we've seen a 5% increase since January, and year over year, no surprise, it's a much larger increase. When we look at Oshawa, Oshawa is slightly cheaper when we compare to the rest of the Durham region. Average house is worth $1,099,000. That's February 22. That would be an 8% increase from Jan 2022. And of course, as mentioned, a larger increase year over year compared to Feb 2021. Now, what's important to kind of keep in mind is that months of inventory in the month of February was still fairly low, 0.5 months of inventory. And on average, it took about 6 days for any property in the Durham region to sell on the MLS. Now, if we take a look at the Durham region, over here on this chart, I have essentially the main towns and municipalities in the Durham region. So we have Ajax, Brock, Clarington, Oshawa, Pickering, Scugog, Uxbridge, Whitby. And what we've tried to highlight here is the number of sales and the average prices, what we are going to focus on. So if we do a comparison, if we kind of take a look at the red square over here, you can see that the average Durham region price, as mentioned, was 1.228. And then I just want to take your attention and bring it to Oshawa, because what I'm trying to focus here, or what I'm trying to drill home, is that when people come to me and they say they're considering the Durham region and this is an area that they want to invest in, people initially come with an open mindset and saying, I'll invest anywhere in the Durham region. But I think the reality is that we need to hone in and we need to focus on Oshawa, because Oshawa has been the most affordable place for investors to purchase. And it's not just because of the price, it has to do with the type of home. So in the Durham region, the most popular investment strategy that people have been taking on and doing well on is of course, the duplex conversions or the turnkey duplex properties or the multifamily homes. So Oshawa has a lot of the wartime bungalows that everyone's aware of, and these properties have a lot of turnover, which is great for investors looking to come in. And also, Oshawa has a mix of the 5-plexes, 6-plexes, 8-plexes in the area as well. So that's why I like to show this, because I want to show people what the Durham region brings to the table in terms of talents, in terms of prices, and then I just want to focus on the fact that Oshawa is in fact the most affordable place to purchase in. And if we look at the number of sales, the first column, you can see that Oshawa has the most amount of activity, which means most amount of activity means that there's more options and there's more choice for investors or end users to essentially look into, consider, and decide.
Saman, just before we go any further here, you mentioned something on the previous slide, and I didn't want to interrupt you, but
Yep.
I think you said 6 days is what it was taking the average property to sell.
That's
I mean,
right. That's right.
Can you give some context to that? Like how unique is that?
Yeah, I mean, I would say, and we'll take a look at some other data, but essentially this trend started mid 2021, and I think the narrative is essentially consistent across the board, across the GTA, and this narrative comes from when agents and realtors started listing properties super low. So you're seeing a lot of agents advertise sold over listing price at 150%, 120%. So essentially started with the pricing strategy. So pricing strategy was very low. People were listing properties $200,000, $300,000 below asking price. That was essentially creating this buzz for the end user, for the investor to say, oh my God, there's a really cheap property. Let's go take a look at it. These listings come on the market, they get flooded with showings, with interest, and then next thing you know, one person wants to submit a bully offer. That generates 3 other offers coming on the table, and as a result, the agent and the sellers are saying, well, we've been on the market for 3 days. We have 7 solid offers to review. So why not? Let's just take a look at the offers now. So that started the trend in mid 2021. And ever since, I'll speak for the Durham region, I'll say that a lot of homes have been coming to market on Tuesday, Wednesday, or Thursday mainly. They're sitting on the market for the duration of the week and the weekend. So if we're going on to market on Wednesday, you have Thursday, Friday, that's 2 days. You have 2 more days for Saturday, Sunday, and typically offers are being taken on Monday or Tuesday. So that's 6 days in total where the house is sitting on the market, 2 days of exposure, 2 days of offers coming in, and the decision being made on the 5th day. So right. I would say that this was the 6 days on market was fairly consistent from June, July 2021 until January, February of 2022. We're starting
this is the average house, though.
Yes.
This is the average house. Like this means there's some that are only on the market for like 2 days, and then there's others that are on the market for a month. The wild thing is, so you've got a half a month's inventory. How many months of inventory do you have to have before you'd be thinking you're in a balanced market? Because this is clearly a seller's market.
Oh yeah, it's clearly a seller's market. It needs to be 3-4 times that in order to be a balanced market.
For 2 months of inventory, you're thinking we're more balanced.
Okay. Exactly. Yeah. And I think
so I just wanted to outline just how significant it is that it is a seller's market. Mm-hmm. And we can talk. We briefly touched on this. Is that likely to change? And we can get into that a bit more. But I just wanted to really drive that point there.
Yeah, exactly. And I mean, we're seeing a lot of pre-construction projects coming to the Durham region, which should be helping inventory levels increase. But what doesn't get talked about is that when a pre-construction project begins, the inventory is already sold. So people look at cranes and people look at these signs of new construction areas developing, and they're saying inventory is coming. But I hate to say it, like by the time those trucks start rolling around and the digging begins, that inventory is already sold. So that doesn't really mean that we're going to have more inventory coming over. So I can tell you that I live in a brand new subdivision, and there's probably 400 homes coming to market, 400 homes that have developed. And out of the 400, of course, some are investors and some have sold. but I would say that percentage of people who are purchasing, a larger subdivision house and then putting it on the market is very small. So out of the 400, maybe you have, 15 to 20 homes that are purchased by investors who are just waiting for occupancy, 1 year lease to avoid HST implications, and then put on the market and sell.
Okay.
Yeah, good question though. So next slide, in this slide, what I kind of want to point out to people who are perhaps not from the East End, if we have some viewers in the West End. So we've kind of pointed out where Oshawa is on the map. As you can see, it's right along Lake Ontario. In terms of infrastructure, highway infrastructure, we've got a nice rectangle. So we have the 401 going east to west, and just on north of that, we have the 407 going east to west. And then we have the two highways, the 412 and the 418, that essentially connect you from the 401 to the 407. The 412 was a toll highway, and that has been removed, and it's going to be toll free. So anyone can kind of use that April 1st and onwards, and likewise with Highway 418. So what I want to kind of point out here, and one of the areas that I've been keeping a close eye out on is Scarborough. And I've said this in my previous videos, is that the point that I've made in the past is that we in Oshawa see the ripple effect of Scarborough. So Scarborough at the moment is at $1.22 million, and that's for an average detached freehold house. If I look at data in the past, we've seen Scarborough, I think it was 2 years ago, the average house in Scarborough was around 800, and then every couple months it jumped by 50,000. So we went to 850, 950, a million. So we see that Oshawa has kind of caught up to that price point of Scarborough. And I would expect sooner than later for Oshawa to be in line with Scarborough. And of course, Scarborough is going to continue increasing, and some investors are going to be tapped out of that market, and as a result flow into Oshawa. And perhaps they can flow into some of the other towns in the Durham region, like Pickering, Ajax. But I can tell you that the type of properties that investors purchase are in fact more expensive in Pickering, Ajax, Whitby in comparison to Scarborough, which is why investors from Scarborough just kind of skip and go right over to Oshawa. It's interesting. So if we look at some of the other areas, so along the Lake Ontario, so Oakville, average price in Oakville compared to the last month was down 1.768 million. I believe in January it was close to 1.8. And then Brampton also has seen a slight decrease in the market as well. But otherwise, the other towns such as Burlington, Mississauga, Toronto, Vaughan have all seen a slight increase in price, which is normal in my opinion. They're much more, highly desirable areas for that end user to move into. So, I think it's a good chart to kind of allow people to visualize what's going on, because when I
Some
get phone
local
calls
knowledge,
from
though.
investors, yeah.
I was just gonna say, I live in Burlington.
Yeah.
Like there's some very not nice stuff selling for
Mhm.
like 1.6 million.
Right.
Dave Knight, I don't know if you know who he is. He just posted the other day. He was looking at a house. It's like the tiniest little bungalow, maybe 600 square feet, 1.6 million. It's insane.
Wow.
It's absolutely insane.
Wow.
Anyway,
Was that
so
a
consider
turnkey
yourself
bungalow?
fortunate in Oshawa. You got yourself a little bit of a margin there to grow.
Yeah. Yeah. So the one thing that we've kind of, the folks here in the Durham region have discussed is that Oshawa, remains to be a waterfront community along the 401. And, in terms of comparison, in terms of areas, you have Oakville, you have Mississauga, you got Scarborough, which are all waterfront areas. And I know that Oakville, Mississauga, bring another type of demographic, another type of construction, another type of more prestige and more, upscale homes. But, I think it's just a matter of time until we see the Oshawa bungalows being torn down and these mansions being built on them, because people do have the luxury of, really nice lot sizes, right? So it's not unusual to see 60, 70, 80-foot lots in Oshawa where people are buying these bungalows for the short time, using it as a rental property, and then eventually, tear it down and build some either a detached property or I've even seen people building semi-detached properties with in-law suites. So you get, 4 units in total from a semi.
So you can get 70, 80 wide by how deep?
120, 130, 140.
So that's common.
I would say, yeah, certain pockets are common. So there's a neighborhood here called Centennial, which is North Oshawa. Very nice area, close to the airport, close to a lot of amenities. And yes, those lots are the larger lots where it's very common to see frontages over 60 foot, 60 to 80, maybe even 100. And then in terms of depth, yeah, we're hitting 120, 130.
That's really nice.
Yeah, yeah. Okay. Um, Next, so we've spoke about February. Now let's take a look at March. So what I've done on this chart, I've essentially created what Durham Region, Clarington, Oshawa, Whitby, Ajax, Pickering. These would be like the main towns that people focus on when they come to here. I've taken the data for February 22, and then I've taken data, year-to-date data, so 21 days of data for March. So what I've done is I've looked onto our MLS system, and I've looked at what's sold from March 1 to March 22 for freehold detached properties. And, it's interesting to see that essentially Clarington, Oshawa, Whitby, Ajax, there's been a bit of a price decrease. I think a bit of this has to do with the fact that there's more inventory coming to market and the fact that there was a bit of that March break data that was caught in there as well. But I would attribute most of it to more inventory coming to market. If we go back to January, February, there was days where we were seeing as little as 10 to 15 properties coming to market on a daily basis. In March, we've seen that increase. We've seen days where we're getting 25 to 30 new listings coming to market. And as a result, I think it's normal to see as levels of inventory go up, prices start to come down slightly.
Seeing supply and demand in action.
That's right.
But
Yeah.
there is one thing I wanted to ask you is how much of an effect you saw, and I've been asking the other updates the same thing.
Mm-hmm.
How much of an effect did you see from the conflict in Ukraine and gas prices kind of happening at the same time? The uncertainty that caused. Did you see a notable effect in the market right then?
Yeah, that's a good comment because those things kind of happen along the same time as inventory started rising. So um, I spoke to a handful of clients and I spoke to a handful of mortgage brokers, and the people that it had an impact on was um, buyers who had funds still in the market and buyers who were waiting to cash out their investments to be able to get onto the market. So, for one, we can argue that perhaps those group of buyers did not have their ducks in a row and were not ready to make the purchase. But I think it was more of a combination of interest rate hikes. It was a combination of the events happening in Ukraine that really had people's mindset kind of changing. And I know that in the realtor community, a lot of realtors started talking about the market's changing, the market's changing. So when you couple those three things together, it naturally puts a bit of a doubt in the end user's mind. And I think we did see that. And evidence to that would be the amount of listings that did not sell on the day that they were supposed to sell, and as a result, flowed into having either price changes, terminations, and as a result, a new listing being listed again.
Yeah, these things are temporary effects, right? But they create an opportunity when you can kind of predict when people become emotional. It's like when the stock market crashes and everybody kind of just pauses. That's the time to buy. When everything just crashed, buy those companies that have been around for 100 years. Not stock advice, not any advice. That's just my take. But that in my mind, that these type of events, they are opportunities in disguise sometimes.
It's true, Andrew, and I have an investor mail list where when those events were all happening at the same time, I was sending out properties to my clients, and I was not getting any responses. And at that time, I was personally myself not in the market. I was not, I had kind of made this comment to myself that I'm kind of done doing what I need to do in Oshawa. I need to scale, but I saw an opportunity, and I said, well, if no one's buying, I'm going to put out an offer and see if I get lucky. And I put out offers on 2 properties. I wasn't successful because I was really trying to get a deal. But I think it goes to the fact that someone who understands the market, someone who has said that I'm done with the Oshawa market for now until I see another opportunity to get in. I was seeing that people were not responding to it, and it kind of goes back to that point of, being greedy when others are not. So I wanted to kind of test the market and see if I can get a deal. And I was going, really low. If I had got these properties, it would have been, a home run deal in this market. Unfortunately, it didn't happen. It's okay. But, the point I want to make is that, I was active and I was trying to get a deal going here. And I would encourage that, send that message to investors out there saying that, if you are trying to get into the market, don't let this noise, this temporary noise kind of deter you, because we're going to make sure whatever we purchase makes sense financially and based on numbers. So I'd say still stay active. And if you're in the market, continue shopping. Don't let the noise discourage you.
Yeah, a great point. I mean, fundamental real estate buying, anyone who follows me knows that I promote that. You got to have cash flow. You got to make sure that you have a good plan A, B, and C. What are you going to do if you've got those plans, in place, you don't need to worry about other people's fears. You just know that you're doing fundamental buying.
Yeah. So Andrew, you made a good point about cash flow, and I wanted to chat with you about this because I've been having this conversation with some others in the area. So, in the Oshawa market, we can essentially go up to $1 million, 1.1, maybe 1.2, and the cash flow still is there. It's nothing material, right? It's nothing material from a cash flow perspective. So if you're looking to make a purchase where this cash flow is going to help your daily life, that doesn't make sense. But if you're purchasing for the fact that you want your property to be cash flow positive, then yes, it does make sense. The question I wanted to ask you was, you have you have an investor coming in who has a great job, who doesn't necessarily need the cash flow. They are already in a higher tax bracket rate. Would you turn that person away if the property does not cash flow on a monthly basis, and perhaps they're out of pocket, they're creating a paper loss on a monthly basis? So, I'll give you my take and then you can comment on it. For me, if someone is financially stable and they have the ability to carry this property, because I know that this investor is going to make most of their return from either appreciation, which is a speculation play. So let's put that aside for now. But second play would be the mortgage pay down. And as a result, I'm comfortable telling this person that if you have a good enough income where your income is not going to be impacted and you see your income growing for the foreseeable future, for you, it may make sense to take on a property that doesn't necessarily cash flow immensely, and perhaps you're in a negative $100, $200 a month, because it also protects you from a tax perspective and a tax exposure. So I'm not necessarily deterring those people away. I'm just saying, we're going to be out of pocket perhaps $100, $200, but let's realize and understand that your profit is going to come from the mortgage pay down.
Right. And so I don't like to paint everyone with the same brush. So,
Yep.
I mean, there's a number of things to look at, and it's very philosophical. But for one, I look at concentration. So as an investor, if I've got a portfolio of 30 properties and I've got a few that are cash negative, but the overwhelming nature of my portfolio is cash positive, then I'm not so worried about that. But if I'm a first-time investor and I'm buying into cash negative, then I need to dig a little bit deeper and think, okay, why am I okay with that? Is it because I have other streams of income, multiple other streams of income? Like if I lost my job, I'm not worried about that. Those are the type of things I'd start to look for. And then of course you have other people who've just decided this is what I'm doing, and you're not going to change their mind either. There's a mix of all that. I think for me, I just don't want to be paying for the property. So if it's, if I've built in a maintenance budget and if it's cash zero, well, that sure beats paying for it. I think we've gone from an age where prices going up were a speculation to it's almost a certainty. And big asterisks there, almost. There is no certainty and there is volatility. And I expect that we will see a correction, but we will also see prices rebound, and those corrections will be opportunities. So for me, I'm confident that if I'm in a situation where there's a correction, I'm going to cost average my way through it, and I'm going to buy more when the correction happens, and that's how I'm going to take advantage of that. It's really tough when you're a first-time investor and you buy into cash negative to not worry about that at night. So my big thing would be this person better have some significant wealth behind them that they're not going to worry about that. Like if that's their only investment dollars and it's going to be a loser, I don't think that's a good fit. But if they're very wealthy and this is just a small piece of the bigger puzzle for them, then it could definitely work.
I think you make a really good point of, overall portfolio and what the exposure levels are there. Because I'm with you. If it's your first investment and this is, the only thing that you have going for you, you don't have any registered funds, retirement savings, I don't think it's the right plan. But I think if everything else, you have all those other things in check, and now you're kind of going to the next step of diversifying and perhaps getting into real estate. And as you mentioned, you've got some wealth behind you, likely means that you're in a not so favorable tax position. And I think at that point, you can start having the conversation of, maybe you're doing this for the purpose of tax protection. But
Yeah.
again, I feel like it's a very different group of
Every
investors.
single, man and woman's going to have their own comfort level, right? So
Yeah.
I think the question we all need to ask ourselves is, will this keep me up at night? Can I
Mhm.
sleep at night? For me, as a real estate investor, I needed to have X number of dollars in the account to know that I could handle anything that came
Yeah.
for every property, and that let me sleep at night. That's
Yeah.
unique to me. Not everybody would feel that way. So
Yeah.
it's just a personal question, and I think that's probably the best way to leave that.
Yeah, I agree. So we spoke about seeing the opportunity and seizing the opportunity, and as of now, prices are decreasing a little bit. So perhaps it may be an opportunity for people to look at the market more closely.
Oh
And
yeah.
before going any further, I'll say that I'm happy to jump on a call with anyone who wants to kind of discuss the market. And after these videos, I do get on a lot of calls. So I encourage you, if you are interested, feel free to reach out to me. Best way to find me is, of course, on Instagram, and there you'll see a link to my Calendly, and we can set up a call.
Awesome.
Okay, so this is something that I wanted to kind of discuss. So new listings. So new listings would, of course, mean supply coming into the market. Um, we saw a lot of listings in February 2021 and March of 2021. You see 600 new listings, and then 823. And then we started kind of seeing this weird impact. So I'm going to take you to June 2021. That was the first time that we saw a big, price increase. So May 2021 number of listings was 629. Average price was 772,000. In June, a lot of that inventory went away and new listings were low as well. And we can perhaps say that there's a bit of seasonality there for the summer months. But as you can see, number of listings drop and price goes up to 796. And of course, during those, prior to June 2021, there was lockdown, and a bit of the lockdown kind of rippled into the next month. And then we fast forward to November of 2021, and we see that November 2021 saw the lowest amount of inventory, versus the last 6-7 months. And we went from 304 listings, average price was 862. December saw a further decrease in inventory, and again, that could be seasonality, but we saw prices jump nearly 50,000. And then January, there was another pop. So we got a bit of inventory, but nothing close to what we should have been seeing in terms of average number of listings. And that's the first time we went over $1 million in Oshawa. So, you start seeing the effects of listing having a big impact on price. And fast forward to January and February. February, we saw inventory levels go up, but we saw prices go up. So there's a lot of, to your point, supply and demand. We're seeing the supply decrease, and then we're seeing prices increase. And then we go from January to February, we saw the supply increase. So we're going from 262 to 468, but we're still seeing prices increase. So there's a lot of these buyers who were not successful in previous months, who are still shopping around, who are still fishing around. And I think the reason why we saw that price increase, although there was a increase in the new number of listings, I believe that it had to do with the interest rate announcement that was coming into effect. I think people came to that realization that interest rates, it's a reality, it's going to go up. This is our opportunity to pull the trigger and get into the market. And I think that's why we saw a bit of a jump in prices as well. But then fast forward to March, I projected that our new listings should be around 320, 330 for the month of March. So it's going to be a drop from February. And as a result, we're seeing that pull down of average prices as well. Any comments there?
Well, yeah, I don't want to get too into it. I want to let you get through more of the meat and potatoes here, and then we can dissect more.
Okay, perfect. Yep. So, something else I want to talk about. A lot of the viewers did see this this property when it was purchased. I spoke about it high level. This was a project that I purchased. So, purchased this in the month of June 2021 for a price of $755. So this was a record-breaking price in the month of June for a bungalow. So the reason why we paid a premium for this bungalow is because it was on a large lot. It was around 55 by 135. I saw an opportunity to essentially, create a garden suite in the event that that legislation passes. So that was a speculation play that I was willing to make because I knew from reading documents that Clarington was in the, which is, one town east of us, Clarington was in the process of approving their garden suite, and that has now been approved. So, I was comfortable paying a premium for this because of the lot size and because it was in a really nice location. So just going to give you high level numbers here. We purchased the property for $755. We put around $125,000 into it. It took us around 7 months to finish. The after repair value on it is 1.1 million. And that's based on a comparative approach based on 4 or 5 homes that have sold within like a 0.5 kilometer radius, same type of setup. And I think that we can bring in a total of $4,400 a month on this property. So we did, upstairs, we did just a lot of the cosmetic work, new kitchen, new floors, new paint, just cleaned up as much as possible. And then in the basement, we essentially took the basement, and what we did was we did a legal conversion here to code, and we created 2 bedrooms in the basement, a nice open living area. And I was hoping to, take our viewers through the numbers of this, because when I purchased this was, it was a very expensive purchase to make for Oshawa, especially in that month. But of course, a lot of the success on this, so, it's a nearly perfect BRRRR. But a lot of the success, of course, goes to appreciation. Nothing that we did magically. We just did the work. Market kind of helped us get there. But I want to take people through the numbers and kind of show you what you can achieve in Oshawa. And this is really important because if we start seeing prices come down, we might be coming to this price point. And if we're at this price point, I think you need to be comfortable with pulling the trigger. So I'll quickly take our viewers through this. Purchased a property for $755. 20% down, down payment was $151,000, approximately 2% closing cost, $15,000. Our repairs were $125,000. So our total capital that we required for down payment and renovation was $307,000. We held this property, as mentioned, for 6 months, and our holding cost for the 7 months was around $21,000. I mentioned that we were going to refinance at 1.1 million at 80% loan to value. Variable rate right now, we're getting 1.5, 30-year amortization. We're going to get back $276,000 from the refinance, meaning we'll be leaving $52,000 cash in the property, which in my opinion is a healthy deal for this market. If we go to the top right and take a look at the rental income and expense, the upper unit is on track to achieve $2,400 a month. The lower unit will be around $2,000 a month. We have 2 storage sheds. I'm just going to include it as part of the agreement for the upper and lower, just kind of incentivize people to know that they have a bit of storage outside. So I'm not going to be charging anything extra for that. So if we take a look at our mortgage payment, property tax, and insurance, it's all laid out there for us. Gas, hydro, water, that's going to be at the expense of our tenants, so it's not going to be on our books. I have a maintenance and vacancy reserve in there. Maintenance, just to make sure if anything happens in the future, we have a bit of a reserve for it. And a vacancy in the event that we have tenant turnover, we want to make sure we have, 1 to 2 months of rent. And I'm expecting our tenants to stay there for approximately 2 years, and then we'll have a turnover. For this property, I haven't put in a property management fee because I'm just going to be managing it on my own. But if we did, we would put in 8%. So right now, our cash flow is $589 a month. Nothing crazy. If we were to put in the property management there, I think we can reduce it by $250, $300 a month, if my math is correct. So it's still cash flow positive, and there's a bit of soft cost in there that that are not necessarily cash outflows, so that the bank reserve will be higher than what we see on the total cash flow line. And then we just do a quick, 5-year investment analysis. We assume 0% appreciation for now, but mortgage pay down after 5 years would be around 121,000, cash flow 35,000. And I'm just going to take you down right to the bottom line. Average annual ROI, nearly 60%, which is great, and that's assuming 0% appreciation. And the debt to service ratio is healthy as well, over 1%. It could be a bit higher, but prices are going up and ratios are being squeezed a bit. So I hope that people can look at this and say that, yeah, it's a good deal. It makes sense. And if the market does correct to a point where you're comfortable and this is the number, I'd encourage you to reference this and know that you can still cash flow here.
Yeah, in a scenario like this, it's okay. I mean, like you have cash flow, market's up, market's down. I got cash flow. Those type of scenarios are the ones I like because I'm not as worried. I don't need to speculate about market value. I could just say, you know what, this one works. Yep. Let's just keep letting it generate me $500 a month, $600 a month, and in a few years when rents go up, we'll make a bit more. And those are the nice type of investments. If you want to hold something longer term, you're ready to hold it longer term. It's great. Yes. Once you get into the shorter term plays, flips, stuff like that, if you don't have a good plan B to hold it, you could find yourself in a little bit of a hairy situation.
Yeah. And you know what, Andrew, I'll say that from a flip perspective, I do have clients right now who are working on flips in the Oshawa area. But I would say that these properties are the properties that an average investor is going to walk in there and say, oh my God, this is going to give me nightmares, right? So we've got 2-story rooming homes with people paying $400 a month. There's 7 tenants in there. It's taken them almost 9 months to get rid of the tenants. Complaints, arguments with the tenants. You need to be a savvy investor to be able to walk into that and to be able to manage that.
Right.
And so a lot of people want to get into the flips, but they want to get into a very easy, very quick flip, which in this market, unfortunately, there's not a lot of those opportunities. You need to get your hand wet if you want to.
Right, for
flip.
sure.
Yeah.
Okay.
And then, the reason why this works is because rental rates are fairly healthy, $4,400 a month. And I've kind of shown this people in the past, but just wanted to give people some comfort over what kind of rental rates they can expect. So the upper property is an upper unit, 3-bedroom, 1-bathroom in the McLaughlin neighborhood, which is where this property that I just showed you, Project Fernhill, is located in. These guys have achieved $2,500 a month. And then the lower unit, the lower property, 182 Gulf Street, is in Donovan, which again I would consider both these properties to be in A+ neighborhoods. Again, 3-bedroom, 1-bathroom, $2,350 a month. Both these properties are newly renovated, picturesque. They're going to get a lot of eyeballs, and you're probably going to attract the best of the best when it comes to tenants. And then in terms of lower units, we have 45 Central Park and 558 Adelaide. Again, I'd say both are in 558 Adelaide. We saw the upper unit in the previous picture, but previous slide, but both again in very good neighborhoods. The upper one, Central Park, is 3-bedroom, 1-bathroom. They're achieving $2,000 a month. And the lower for Adelaide is 2-bedroom, 1-bathroom, $1,900 a month. So, I hope that people look at this and say, okay, those rental rates are correct and we can achieve those because, some of the phone conversations I have with out-of-town investors are, of course, about the strategy. And when I talk about rental income, everyone always hits me with, wow, I didn't know those were the rental rates. So I hope that this can give you some comfort. But essentially that, concludes the presentation for this month. I think my takeaways that I would want people to remember is that there's more inventory coming to market, and a result of more inventory, there's a bit of a price correction. And as a result of that, I would encourage investors to stay active, reach out to myself. Let's jump on a call. Let's come up with a strategy. Let's go out, take a look at properties, and let's be ready to pull the trigger when an opportunity is present.
Yeah, I wanted to just dig into that. That's kind of like my main question for you is, knowing the unique situation right now, knowing there is a slight price correction, you say being active, can you just break that down if people 1 or 2 things that they should be focused on right now to help their chances of finding a deal, finding something that works for them?
Yeah. So I've had quite a bit of investors being discouraged in previous months, um, you know, because we're doing these videos and every month we're saying prices jump, 5%, 7%, 10%. So there's a lot of people who were discouraged in previous months. So I think one of the best things to do is, as I mentioned again, but I'll mention it again, is let's jump on a call and I will show you the market and I will show you what the market is doing. I'll show you what listings are doing, what's being terminated, what's being relisted, and let's get you more comfortable with the realistic prices today. That's one. Of course, in terms of being ready, we're still in a market where you need to make sure that you are, if you want to have a competitive advantage, you need to be firm on your offer. So to be firm means no condition of inspection, no condition of financing. To be comfortable over the inspection, we need to physically go and see these properties. We need to go with all our tools that we have available to us to make sure the ceiling heights work, make sure the parking works. Let's take a look at the unfinished areas, see if there's any water issues. Unfortunately, some people, fortunately and unfortunately, in the past, people have taken my word for it, have said, if you think it's good, let's do it. So, if people do want to put that trust in me, I'm happy to do that. But if not, and you want to come out, then, there needs to be that time commitment to come out and see it. And then from a financing perspective, you need to make sure that your financing is ready to go and we can go in firm.
That's the key thing. Like as you become more savvy as an investor, you start to realize, okay, what are the typical problems I see? What's the worst problem I've seen? What did that cost to fix? Once you start answering those questions, you realize, okay, well, you know what? I can probably deal with anything. Do I have reserves in case these things happen? Do I have a good broker that can get me money if something unexpected happens? The more of these questions you write out, get a sheet of paper, write out all your concerns, try and get those answered before you even start shopping. Because like you're saying, if you're not ready to strike, there will be somebody else that is. And that's not advice. That's just a fact.
That's just a fact.
People will be ready. So the more you can prepare yourself as an investor, the better off you'll be. That's my 2 cents there. But we are out of time. So Saman, where do people reach you?
Yeah. Best way to reach me is through Instagram, Saman Habibi _real estate. On there, I post a lot of content on, the projects that I'm working on, tips and advice to our investors. And on there'll be a link in my bio where you can essentially go in and book a call with me, and we can jump on a 15-minute call, come up with a strategy, and then get the ball rolling so we can get your first investment property or your third, fourth, fifth, whatever it may be.
Awesome. Well, this was jam-packed with information. So thanks for that, Saman.
Awesome.
Thanks for everyone. Thanks for everyone tuning into this update. And again, if you'd like to reach me or follow me, it's at the Andrew Hines on Instagram, or you can search any of the podcast platforms, including YouTube, for my name, Andrew Hines. And that's spelled Hines, not like the ketchup. And anyways, thanks everyone. We'll see you on the next update.